Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some favourite oil and gas plays. Starting off with Xcite Energy, which has obviously been in the news this week on the Statoil Shell developments. From a technical perspective, Tuesday's end-of-day close above the 50-day moving average at 77 pence was significant. That was the first time the stock had managed that since November. But perhaps even more so in terms of the bull argument and in terms of importance was the end of day close back above the former March 80 pence support on the way down. There was a decent bounce from that in March and something of a full storm recovery before the plunge in March and the higher low for April. In fact, that higher low was the first sign that there could be a recovery here from a technical perspective. Also, there is a bounce, or there was a bounce off the floor of a falling November price channel from 2012. But really, we have to admit that the deal was something of a surprise on the daily chart. That was an unfilled gap to the upside through the 20-day moving average at 68. So really, on that basis, the signal was to go long on the end of day close at 82, and we already had plenty of upside there for Wednesday. In terms of how much more upside we could get, probably looking to the 200-day moving average at 99 pence as the likely inverted commas minimum on the upside, maybe a bit more there at the top of the price channel from 2012 at 105. So let's just say probably above yesterday's close 82 pence, we could get up to a best case scenario target of 105 in the near term. But obviously the fundamental situation has probably overtaken the technicals at the moment. Another recovery situation, one which has been in play for a bit longer now, is Bowleven. Extended base here within a falling trend channel from October. Multiple support points here at and towards the 30 pence level. Current position here is that we've got a triple golden cross buy signal between the 10, 20 and 50-day moving averages at 33 pence. This is likely a bull flag consolidation before a new leg to the upside, and the RSI is in the right place, having broken through neutral 50 to stand at 58. The upside here probably back towards the November gap around the 50 pence mark. Probably the minimum I would be looking for here is a retest of the 45 pence 200-day moving average over the next 4 to 6 weeks. That takes us to the end of May, beginning of June, that sort of time frame. And as I said, a decent recovery here after the extended base since the autumn. Moving on to Gulf Keystone, where there'll be lots of people hoping that we get the sort of recovery that we've seen in Xcite Energy. So far, it's been a bit of a struggle. We have actually had, similar to Xcite Energy, a higher low in April, the second higher low above 80 pence. And if you're an aggressive trader, that might be your cue to go long. Probably, though, in this situation, given the recent history of the shares, you might want to wait a bit longer in terms of going on the buy side. An end of day close above the 50-day moving average at 111 pence, probably the best thing to do, especially if you learn the lesson from what we saw at Xcite Energy there. The 50-day line was at 77 pence, and when that was broken, that really caused the shares to power ahead. Next up is Gulfsands Petroleum, stock which has been championed in a big way on Spreadbet Magazine around the 30 pence level. Slightly unpopular choice at that point in terms of being a buy prospect, but unfilled gaps to the upside through 30 pence to start off the rally, something which is always significant and tends to work quite well. An extended bull flag around 40 pence and then the break higher. The situation now is that there could be a retracement back towards, say, the 200-day moving average at 52 pence. That's the black line here. But I would still be quite optimistic about the prospects for this stock. It's done very well in terms of bouncing off this broadening triangle formation at the 30 pence level. And the best case scenario target here, probably up to 80 pence on a 2 to 3 month view, as long as we remain above the 200-day moving average. So risking 5 pence to make maybe another 20, 25 pence over the next, over the part of the course of the early summer. Finishing off with a final stock in terms of recovery, and it's Rockhopper. Here we also have a broadening triangle here, not quite as impressive in terms of the upside so far, but we have rallied from sort of around the 90 pence area to nearly 110 over the course of April going into May. What we want here really is that there's no break of the June support line down to 90 pence. If we can hold above that, we could still be looking at a reasonable recovery, if only back towards the 110, 120 pence former support zone. That's it from me. See you again next time.